Hey, Trader Tim here from EminiMind. In this video, I wanted to expand upon the topic of the 1 minute candles and trailing our stop, and a couple of things that we had started talking about on Tuesday in the live session. Going to expand upon that here, and then we can talk about a couple other trades from the week. Before we get into that, we'll just pull out a little bit. It's been a pretty whipsaw week, I would say. If you look at yesterday's price action, that's a great example where we established the first 30-minute range, and that's the two gray lines here, and then we traded above it, and then we traded below it, and then we spent some time in the middle of it, and then we traded back above it. So just kind of all over the place on the ES as far as direction is concerned. Starting the week with the move down, and then the last couple of days having the gap up, filling the gap, and going. And then today we gapped up. We didn't quite fill the gap, but then we turned around and went back to the upside. So a little bit all over the place. Felt like it was a challenging week to really get much momentum going. Had a number of retracement trades, but nothing super big. One today, I guess, was the best retracement trade I had this morning, and I can just highlight that, and then we'll get into the 1 minute chart. So today's retracement short, it's Friday morning here, retracement long rather, was off of lows, and we were coming down into, this is about 20 minutes into the day, we were coming down in the lower high, lower low, lower high, lower low, and came down. This was the last retracement in the series down before breaking its 61.8 here, breaking this swing high, as well as the more important swing high is over here. One thing that, a little more advanced concept, but if you take the low point and draw a vertical line, the swing high to the left is going to be more important here than to the right. So there are some cases where you'll have a really, really small bounce where it makes a swing high, but this right leg doesn't come down and break the low from the anchor point. So it's a little bit more advanced concept, but if you just kind of take a mental note of if the chart is putting in a higher low, look to the left of that point for the applicable swing high. So that was broke here. And so then you can delete your retracement short, turn it around, draw your retracement long, and then that sets you up in the trade entry. And this was a good one, kind of off of lows, about 20 minutes in, like I said, traded the 50, and then we were off and running. And so from a management perspective, you can just trail the next retracement in the series. It went up to the negative 23. This one didn't pull back at all. So from there, you can just draw the next retracement from that tiny little swing low. Sometimes if it really gets moving, I'll come in and trail each candle. The range today, if we go to today's 30-minute range, was about 10 points. So they've been smaller this week. We had a couple 8-pointers today, 10 points. We had one that was 17 points, but 10 being kind of on the smaller side. So this wasn't a huge range, so I just felt like drawing the next retracement was sufficient. I didn't have to get super aggressive with it. I hadn't really had a home run retracement trade this week, so just giving it a little bit of room to run to the, I was hoping to get to the top of the range, and that's essentially where we went, just a little bit higher. So once that one broke out, then you can either trail the extension, which is where I chose to go up here, and that puts the stop basically right about the top of the 30-minute range. So that was a nice one for like 8 points plus the 3-point first target. I think actually it was almost 9 points for that run. But what I really wanted to talk about today is the 1 minute chart, and specifically trailing your stop on the 1 minute chart. So I've gone through a lot of my trades from last year, and we've essentially I've just been trailing each candle. So if you see a 1 minute chart and you see a hammer getting long above that hammer, or an inverted hammer getting short below that inverted hammer, so this would be an inverted hammer, short one tick below, and then this would be, here's a hammer here, getting long one tick above. Ideally, those hammers are down at lows, either the absolute low candle, like this guy this morning, or this one was the high sticking up here. but somewhere near highs or near lows. Then the other place you can look for those trades is at a 50% retracement. So down here, we kind of had both. We had a hammer at lows, and you could draw up a 50% retracement, and you've got the hammer here that candle touches the 50% retracement. So both of those are fine. What I wanted to talk about is trailing your stop. And so when you get in that trade, let's just say you get long above the hammer here, trailing each bar is typically the approach I would take. Trailing each candle, if you're long, it's one tick below the candle. If, let's say, you were short, it's one tick above the candle. But in a lot of cases, like let's say you shorted below this big long inverted hammer here, and then you started trailing your stop above each candle, well, you're going to get taken out here on this little swing that pokes above this red candle's high. And so what we looked at doing last year was trailing swings, which means instead of getting super aggressive with trailing each candle, you give it some room, you leave your stop alone, and then you let it make its initial push down and bounce. And then when it makes a new low, breaking that swing low, then you can take your stop from the entry candle's high for a short and move it to the next swing high. And that's been really good. And so the approach has been what we discussed on Tuesday and earlier this year is, splitting your position up to where you can trail half the position behind each candle, and then the other half of the position you can trail swings. So, like for this, just saying this short, you could, get in with as little as 2 contracts below the candle's low. You could start trailing each candle, and then if you get taken out on that one contract, then you have the second contract where you're trailing the swings. And so you're trailing a little bit more conservatively, but you can stay in a lot longer in some cases. And so, looking at that, splitting it up is a really good way to go. But I wanted to look at a couple other approaches, and if we look at this hammer down here, wasn't a true double bottom. The low didn't exactly touch the low, but it was pretty dang close to the bottom of the 30-minute range, which was the low of the day. And so if you're getting long above that hammer and you're going to trail swings, you want to wait for the market to bounce a little bit, pull back. All the meanwhile, your stop is still down here. And once it pulls back and comes up and breaks the swing high, then you can move your stop from that low point to the next swing low. And so when you get in this kind of a situation where you've got these 2 pullbacks here, look at this bounce point. This swing high does not break the swing high to the left. So your stop is still down here. The market rallies, it pulls back, it rallies again, and you're thinking, okay, I'm going to be able to tighten my stop, but it does not break the swing high here. So your stop remains down here. And so you end up sitting through this consolidation. We pull back here. This hammer over here makes a slightly lower low than this low, but your stop is still down here with plenty of wiggle room. And then once we break the swing high, then you can bring your stop up to here. And then the market rallies again. It pulls back. If you look really closely in here, we had this bullish engulfing pattern, which does technically make a swing low. It's pretty tiny, and you'll see me, talk about on the 512 tick chart. Sometimes you get a pullback that's just one candle, like this little green candle here, and I wouldn't necessarily redraw my retracement from the high anchor point down to this little green candle. So the concept here being, let the pullback occur to where it's, a little bit more visible than just a one candle pullback. But even if you did tighten your stop up to 48.25, you're still locking in a solid profit from lows of the day to the top of the 30-minute range. Where were we at here? Right here. But if you give it a little bit of wiggle room, it pulls back. You can bring your stop up once it makes the new high to the next swing low. And you can just repeat that process. It makes a high, it pulls back, you're sitting tight, your stop from here all the way until it makes a new high, and then you bring your anchor your stop up again. So you have to have a little bit of patience to sit there with unrealized gain, letting it pull back and then make a new high. But I mean, look at how long you can trail your stop in these situations where, zoom out a little bit, you're going from essentially lows of the day up to highs of the day. And so regardless of the trail stop approach, the nice thing about the 1 minute chart is your risk is cut very quickly, within minutes, even on a situation where you're letting the market pull back and rally. If you start with your stop down here, one tick below lows, and you wait for it to break the swing high before tightening it, you're only talking 5 minutes. So sometimes that can feel like an eternity, but in reality, if you can get through, the first couple of minutes with the ES with a little bit conservative stop, not just moving it to break even right away, because then you're just going to get taken out and the trade's going to likely run without you. But giving a little bit of time to get moving, you can catch some really big swings. And in the process of being long from lows, you are then preventing yourself from jumping in on, let's say, a short. Let's say if you weren't in a trade, you might come in here and think, oh, I want to take a short from highs. And so if you're in a long trade, presumably you're just going to be in that one trade, and that therefore you're going to pass on any other trades that come up. And so you can catch the bigger swing, which means more profit, and you can eliminate some losers because you're already in a trade and you're just sitting there managing that trade. So that's the main thing I wanted to highlight with the 1 minute chart. But then the other thing I noticed as I was going through and kind of reviewing some of my past trades is I like this idea of taking a profit after what I came up with was just 4 consecutive green bars for a long or red bars for a short. And I just chose 4 because, on a 1 minute chart, that's 4 minutes of essentially straight down. So like here is 1, 2, 3, 4 red bars, and then here is 1, 2, 3, 4 green bars. And a lot of times, the market, even if, so let's say we formed this hammer and then we formed 4 green bars and we went straight up and we were up, 6 points, I would be more inclined to take a quick smaller profit sooner than be in the trade to risk the longer trade. So it may seem a little bit counterintuitive, but it needs to be a decent profit, and that's where the 4 green bars come in to play. So like, let's say the 4 red bars here, because it's going down, essentially that move is from the high of the 30-minute range to the low of the 30-minute range. That is a big chunk of the move. And if I was going to trail swings, my stop, I could keep my stop up here and wait for it to roll back over. But if it doesn't, then I'm giving back this big chunk. And so kind of a combination of, if it's a medium-sized winner, and that's based off of the 4 bars, and that was just based off of observation from going through various trades. Taking a moderate profit, like getting a double, I would rather have a lot more doubles, to use the baseball analogy, than just one home run. So if I can hit doubles, 75% of the time, and that's sending a lot more people into home plate versus getting up and striking out 90% of the time and then only hitting 1 out of 10 home runs, I'm going to have more runs, if you will, at the end of the game. I'm going to have more profit at the end of the day if I can get aggressive with my stop when we get those 4 bars. So that's one thing that I'll be looking into more as these next coming weeks go on. And that same approach is like what we do with trailing each candle if the 512 tick really gets moving. If we're in a trade and we're up 5 points of profit and all of a sudden it starts ripping and now we're up 8, 9, 10 points of profit, but my stop is still down at 5 points, I'm okay coming in and getting a little more aggressive to lock in that profit on that quick run. And that's the real key. It's a quick run or a quick nosedive. And so if you kind of combine with multiple contracts, the various entries, trailing swings, maybe combining that with if the market gets a four candle run, then you could take some off at that point. These are just a couple of ways to manage your profitable trades on the 1 minute chart. And since so many of these trades get very quick movements, you really can't go wrong. Either way, you're taking a profit. It's just a matter of how much profit can you comfortably let be unrealized with your stop far away. And so you may work with one as you practice trailing swings and kind of staying a little more conservative with your stop. And if you can get up to like 2 or 3 contracts, then you have the possibilities of taking multiple exit, and then you're capitalizing on each of the trail stop approaches. So that's been a really good addition, especially in 2023 when the volatility came down a little bit compared to the couple of years prior, and 2022 really. So I'll continue to trade the 1 minute strategy alongside the retracements here as we get into 2024. So hope you have a great weekend, and if you have questions, feel free to drop them below or drop them in the Discord, and we'll talk to you soon. Thanks a lot.